Hello. Hello.
Oh, sorry, I had.
Hi. Hi. That's the number of times these days I say you're still on mute.
Yes. Yeah, exactly. Phrase of the
Yeah.
year. How are you?
Yes, very good, thanks. Yeah.
Good, good, good.
Um, are you in New York?
No, I'm American, but I live in Finland. I've lived here for about 3 years.
All right. Yes.
Yes.
I'm watching a Scandinavian series at the moment, but
Oh, which one?
Norwegian. It's called Foreigners. It's a bit random and out there, but
Okay. Is it
quite
any good?
intriguing. I think it's quite good.
Okay.
I'm a bit of a sci-fi geek anyway, but it's about these people just start sort of appearing in the water, and they're from a different time, and they decide to that ends up being thousands of them. So they develop a whole program of integration into everyday society, and it's quite entertaining. But
That sounds really funny. I'll have to check it out.
it's in Norwegian, so it's subtitled, but I quite enjoy the language. Is nice to listen. I do find most Scandinavian languages quite entertaining to listen to because they're so sort of melodic usually. So
Yeah, definitely. Finnish is interesting. Like the first year I lived here, it sounded like I couldn't even make out the different sounds because it was
yeah,
so foreign, but I'm getting there. Slowly
and they're
but
so reserved. It's hilarious. I've done sales trips around the Nordics,
okay.
and you go to Finland, and after an hour's presentation, no one says a word.
I know. It's so funny. It feels like everyone here is sort of embarrassed to be alive. Like
Yeah,
yeah. Well, anyway, thank you so much for taking the time to join me.
that's all right.
Yeah. Do you have any questions for me before we sort of officially get started here?
No, so yeah, I've so it's a podcast. You want it? Do you want it to be a sort of? First of all, is my the voice quality good enough? Do you think?
Absolutely. Yeah, you sound great.
And do you want it to be a kind of start to finish? Because I won't say, oh, scrap that, let's restart. I won't ever say that.
Oh, I
But
mean, if you want to say that, that's actually totally fine. So, like, yeah, we'll keep it pretty conversational, but also if
mm,
there's ever a point where you're like, okay, let me start that over. That's totally fine. We can edit that out later. So, no worries.
yeah. Actually, hold on. Just let me speak to my cleaner. She's just got the Hoover
Sure,
running. I'll
sure.
just ask her to put it.
Okay, no problem.
I'm just about to do a recording. So if that's all right, yeah, I'll let you know when I'm done. All right, cheers. So that's it. She's
Okay.
done. Just let me put
Sure,
everything on
sure.
silent, just so that I'm just looking through the list, sort of the ongoing effects of US dollar inflation, continued stimulus. Yeah, the effects of political turmoil on Bitcoin markets. When you say political turmoil, do you mean
So yeah,
as in regulation?
well, actually, I wanted to kind of see how you would want to approach this question. And I think what might be kind of interesting is to talk about what's happened recently with this big tech ban on Trump and also Jack Dorsey bringing up Bitcoin and his sort of like, uh,
Yeah,
is this something, as something that could potentially be used to build a better internet in the future, which is obviously something that's been discussed in the cryptocurrency community for a long time.
yeah,
But maybe now, and also since Elon Musk told everybody to stop using WhatsApp,
yes, it's
maybe,
happened, isn't it?
yeah, yeah.
um, I think it also possibly, I don't know if it's of interest to you, but it leads on to the concept of central bank digital currencies. Because
Ah,
I'm seeing this, I every day now, it seems that the Bitcoin network is getting bigger and there's greater acceptance of it. And every day that happens, there's less likely to be an acceptance of central bank digital currencies. So there is this kind of unspoken competition, I think, between Bitcoin and other crypto assets and the concept of setting up central bank digital currencies, which I think is a really interesting thing. I mean, yeah, you can cut that out if you think it's boring.
Yeah,
But,
no, but let's definitely go.
the recent rally and drop, yeah, I've got lots to say there. Bitcoin over the next 5 years. Yeah, I've just published a piece on, well, actually not published, it's going through compliance, just 2021 outlook. So we talk about that. The role of altcoins, the changing relationship between Bitcoin and altcoins. Yeah, I think that's a really interesting topic. Bringing new people into crypto in a sustainable way. Okay, what do you mean by that? Do you mean
So just that, sort of now, as other times in Bitcoin's history when we've seen like a big price run, it's like everywhere you go, somebody is talking about Bitcoin. People are downloading Coinbase and sort of
yeah?
exploring it. But how do we get those people to really like stay when?
Oh, I see. Yeah,
Yeah.
not in an environmental. I thought you meant an environmental from an environmental
Ah, yeah,
perspective.
yeah.
How do you get those people to stay? Let me think about that for a minute. Yeah, I think what you're going to find is I have quite a sort of strong investor focus on
Okay,
all of
so
this.
let's maybe we can skip that for now then.
No. I mean, I can talk about it in some ways. I mean, I think I can still talk about, I think, my criticisms, but I think there's some interesting things that actually we were just writing about today, which was around the different layers of the Bitcoin network. Because I think I mean, maybe this would be interesting to you, but I think there's some interesting points that actually, as a currency, as a money, or as an asset that you can use to transfer value, Bitcoin's quite good. But as a currency that you use day in, day out to do things like pay taxes, buy your groceries, things like that, it's probably not that good. I mean, the speed of transactions aren't that high, but I think it's been some interesting developments of the Litecoin network. And
Really? Okay.
yeah, and if we look at the number of nodes with channels, that's increasing quite a lot. So the microtransactions I think are quite challenging, but I think the Lightning Network component of it, I think, will really help that it become a proper medium of regular exchange, if you see what I mean. So maybe once we've achieved that in Bitcoin, then it's more, because I think there's some good examples which have been abandoned, such as Steam, where you could buy and sell games using Bitcoin, but then it was abandoned because the price was too volatile, for one thing. And I also think if you were to scale it up to lots of people making those transactions, then it suddenly it becomes unviable because of the transaction speeds.
Okay, yeah, so that's definitely something that we can sort of
Yeah,
dig into.
cool.
So in that case, I think maybe if it's okay with you, what we could start with, of course, I'll ask you to introduce yourself and talk a little bit about CoinShares, and then we can kind of jump into what's happening at this moment with, the big tech bans and
Yeah.
the sudden conversation about privacy, censorship, centralization, and control, and then we'll go from there. Does that sound okay?
Yeah, that's great.
Okay, so in that case, let's go officially on the record. First of all, James, I want to officially thank you for coming on the show.
Thank you. Great to be here.
Absolutely. Can you talk a little bit about who you are and the work that you do for people who might not know?
Okay, yes. Well, I work for CoinShares, which is Europe's largest digital asset manager. We have, as of today, about $3.3 billion of assets under management. That's primarily in exchange traded products. We see that as a way to democratize Bitcoin. I think it is still for some quite hard to access, particularly in a financial wrapper or some sort of pension fund, for instance. So we're making it easier for people to access Bitcoin in those ways. And myself, I've stepped over to the Bitcoin world from traditional finance, where I was there working in traditional finance for 20 years and helped manage the Queen's money at Coutts, for instance, for many years.
Okay.
And just more recently, I was head of research and investments at ETF Securities, which was Europe's largest gold fund. And I think about 4 or 5 years ago, we started getting a lot of questions from clients saying, look, you were the first guys to create a gold fund. Why aren't you creating a Bitcoin fund? And for me, I thought, okay, I need to start understanding Bitcoin better. So I actually started mining. I didn't mine Bitcoin, I mined Ethereum for several years. And being a bit of a tech geek, I found it really good fun. But it also helped me understand crypto assets more broadly and try to convey that to clients. And what I'm doing now is spending a lot of time looking at how Bitcoin might fit in a portfolio, how Bitcoin might integrate better with the world, and from an economic perspective in particular.
Okay, so that's so interesting that you were working with the Queen's money. I mean, in a way, it sort of doesn't get any more old school institutional finance
Yes.
than that. And now
Yeah.
here you are.
Yes. Yeah. I don't know if I should be buying Bitcoin just yet, but there's always hope.
Yes, exactly. So when you say that CoinShares uh, is providing these products to make Bitcoin more accessible, who exactly is it making Bitcoin more accessible for?
Yeah, if you think the way you access Bitcoin is, I suppose, in some ways different to how you access other financial instruments. I'm talking about investors specifically here. So, I mean, if you wanted to access cash, you open up a bank. If you wanted to access Bitcoin, for instance, you get a wallet. And I think if you're technically competent, that's quite easy.
Hmm.
But for many people, I think that's still a challenge, whereas perhaps opening a bank account wouldn't be. In the financial world, you know, people operate in a regulatory framework. They have to.
Hmm.
And therefore, when they buy financial instruments, they have to be operating in that regulatory framework as well. And so you need a certain level of regulatory acceptance, really, or at least financial products that can operate within that. And I think before CoinShares was the first in the world to create a Bitcoin ETP back in 2015. And prior to that, there was no real way for investors to add Bitcoin to their portfolio, really, particularly in something like your pension.
Hmm. I see, I see. So this is something that can it's almost, for everyone then that they can use CoinShares to buy some of these exchange traded products, excuse me, and use it for their pension, for their savings, in the States, perhaps for their child's education, something like that. That it's very practical and meaningful, and isn't just like, what we might think of the typical Bitcoin investor, who's somebody who's just, maybe super interested in
Yeah,
alternative finance and tech and Lambos and all of that
yeah.
kind of
Well, there's
thing.
lots of I think there are challenges
Mm,
with Bitcoin when you buy it. Who do you custody it with? And that, do you stick it on USB stick in your safe at home? Is that safe? And actually the same problems. They had the same problems with gold. Um, 20 years ago, if you were an investor, you wanted to put gold in your portfolio, you would have to arrange for delivery, custody, putting it in some sort of vault, insurance, a whole range of different things. And actually, that's quite a lot of work and quite hard.
mm,
And so ETFs, or gold exchange traded products, were created to just make that whole thing really simple. And
right.
it's no different for Bitcoin. Ultimately, we take care of have a very robust custody process, take care of any sort of insurance, and make it very easy to buy and sell, really. And that's why I call it democratization. We're not changing the underlying at all, really. That is Bitcoin. We're not changing it. We're just making it more accessible to
Right.
a wider range of people.
Right, exactly. So I want to talk to you a little bit about what has been happening in the world lately since the start of this year. And we were speaking a little bit before we started recording about um, this big sort of uh, psychological political shift that's been happening because of this big tech social media ban that we've seen on the United States President Donald Trump, as well as sort of a heightened discussion around uh, privacy on apps like WhatsApp and Facebook. So all of a sudden, I mean, these things have kind of been brewing under the surface for a long time, but now there's this really big public discussion about, you know, censorship, centralized control of information, privacy, all these different things. And one of the things that was really interesting was that Jack Dorsey, who's the CEO of Twitter and is also really well known for being a huge fan of Bitcoin and a Bitcoin investor himself, brought up Bitcoin specifically as, you know, sort of something that can be possibly used as an inspiration or even a sort of demo, let's say, for a more democratized web and in the future. But I wanted to sort of zoom out from all of that, or maybe zoom in on what this sort of means. So we've got this big discussion happening about censorship, control, centralization, Bitcoin going up past $40,000 for the first time, and these two things sort of mingling together. What do you think that this means in a practical way for the way that Bitcoin is seen, and the way that Bitcoin is used?
I think this poses some real challenges, and I think there are various government initiatives to compete with Bitcoin, such as central bank digital currencies, and then there's the Bitcoin protocol itself. And I do see them actually. There's still a potential conflict between the two.
Okay.
Because ultimately, Bitcoin is not centralized. It's decentralized, and that kind of means it's actually. You know, I recently read that the US government were thinking about somehow censoring certain Bitcoin transactions. And knowledge of the Bitcoin network, I know that's not possible. And so I think that was a good example of how actually the government might want to control things around Bitcoin, but it's very challenging to do that. And it kind of extrapolates over those different concepts of the economy and society. So another really good example is what the US Federal Reserve's doing, and other central banks such as the Bank of England and the ECB. They're printing a lot of money. Now you're reliant on individuals at the ECB and the Bank of England and the US and the Fed to actually be very prudent about how they print money. And if they're too loose with their monetary printing, it could cause inflation and other socio-economic problems. And actually Bitcoin, some people see as the answer to that. They're saying, well, this is a fixed supply. This is something that's immutable. It's something that you're not allowing a human to step in and alter and cause problems with it. And so I think what Jack Dorsey highlighted was maybe there were sort of undertones of anti-establishment to some extent in there. But I don't think Bitcoin necessarily does that. It's just a bit like gold in the 1930s. It highlighted, in a way, a profligate US government at the time, and gold highlighted that as an alternative, and therefore they stopped it. The regulation prevented it. I think the governments now, though, are thinking actually probably regulation or a ban probably isn't the way forwards. I mean, to look at China, yes, they banned it, but still 4% of Bitcoin trading turnover it comes from China. So they've not completely banned it. And I think their solution may be a central bank digital currency. And many governments are talking about this now. About 80% of central banks around the world are considering one. And there is live testing in places like Sweden, in the Bahamas, and in China, for instance, at the moment. But I think they come with their own privacy issues. To give you an example, if I buy Bitcoin, people don't know it's me, and it's anonymous. Whereas if I bought something with a central bank digital currency, then the government would know exactly what, where, and when I bought. And that comes with lots of privacy concerns. And I do think in 2021 and 2022, there'll be quite a lot of wrangling about just how much does the government really need to know about you, and who controls that information. And should it be something that's completely decentralized and therefore uninfluenced by some sort of rather jaded political individual? So I don't think I have all the answers, but I think Bitcoin, or at least the blockchain concept, distributed ledger technology, certainly has a really important part to play in dealing with that.
Absolutely. And it's sort of, just to sort of think forward into the future, as you were saying, it seems at this point that CBDCs are basically, it's not an if anymore, it's just a matter of when. And it, could even be, in some cases, within the next 5 years, we could see CBDCs sort of really taking hold. Um, right now, when we think about something like Bitcoin and something like the US dollar or the British pound, we have two entities that are very different in some ways. I mean, true, like the dollar and the pound both are arguably, largely operate on digital or electronic systems. But there's something that, as you were saying, is sort of infinitely printable, and potentially infinitely trackable by governments. But as we move forward, and we see these CBDCs kind of coming into reality, what do you think the relationship between CBDCs and something like Bitcoin will be in the future? Or does that really depend on sort of the geography? Will it be different in the United States than it will in China, for example?
Well, it's interesting. CBDCs are not a brand new concept.
Mm-hmm.
Actually, government's been looking into this quite deeply since 2016.
Mm-hmm.
But there have been some CBDC concepts. I think it was in Sweden where the initiative was started and then abandoned because there wasn't enough take up. So if there was no COVID-19, that could have been, the CBDC thing could have been abandoned. So I think it's very interesting what we've seen during COVID-19 is a massive increase in a cashless society. And that's really kickstarted a lot of central banks into thinking about central bank digital currencies. So in my mind, that's, they really seem much more committed to it than they were in the past.
Absolutely.
But I also think there are, don't get me wrong, I think there's lots of real merits from having a central bank digital currency. Much more efficient settlements processes, instantaneous payment systems, all that sort of thing. I think it's great. But you also need, it's interesting that the concept in Sweden was abandoned. But I think you also need a broad kind of acceptance of this. And at the moment, as every day ticks by, Bitcoin's getting more and more broader acceptance quite rapidly, whereas central bank digital currencies are still locked up in a lot of bureaucracy and structuring. There's a long way, I think, before they'll be released. And every day that Bitcoin improves in popularity, they're sort of losing that race. The central bank digital currencies are to something like Bitcoin. So I think there'll be very rapidly stepped up initiatives to try and introduce them. But it does raise some really important potential systemic problems. So if, say, a central bank issues a central bank digital currency, what happens to existing banks? Because I'm presuming they become the wallet provider. Or the Bank of England, for instance, is proposing that the central bank is the core ledger, and then they have an API to connect private industries, i.e. banks, to the core ledger. But if you decide to go down that issuing wallets yourself as a central bank, suddenly that central bank has to do lots and lots of anti-money laundering procedures, adhere to all the supervisory and regulatory issues of each country. So it's a big challenge for them. But it also, I think, is a big challenge for incumbent banks that are technically not competent enough to embrace digital currencies. And therefore, we could see those fall by the wayside. And if that happens, then you could have a systemic problem where banks are not performing their functions properly. So, and I think central banks are aware of this potential issue, and it might be part of the reason why they're delayed, because it could cause massive issues.
Right, and perhaps also that's the reason why we've seen, in China, for example, which has been, as you said, sort of talking about CBDC since 2016, they're like, okay, we're going to launch it in End of 2019, end of 2020. Okay, okay, wait, no, we're gonna first do trials, but we can still see that there is progress being made on that front. Um, and even in the United States, sort of the concept, the digital dollar was mentioned in Congress for the first time over the course of last year in response to COVID-19, as you pointed out. Um, but sort of in addition to the possible takeover, let's say, of CBDCs that we see coming in the next few years, um, the cryptocurrency universe is also growing so much bigger than Bitcoin. Of course, like Bitcoin is sort of the flagship. It's the one that everybody knows, but we've seen tons of DeFi projects take off. Lots of other kinds of altcoins and projects and different kinds of markets bringing and growing, particularly over the course of the last year. So I wanted to just sort of generally get your thoughts on that. How do we see the relationship between Bitcoin and these DeFi and altcoin markets developing?
Yeah, I think it's really, you name them projects, and I think that's a good name for them because many of them they're not even startups, they're just ideas. And mixed within that pot are a lot of ideas, a lot of startups, a lot of companies, and so it's very easy, I think, because they're all in the digital asset bucket to feel that they're the same, but a lot of them are very, very different. I like to describe Bitcoin as basically an emerging store of value, whereas Ethereum is more like Amazon Web Services, but with a currency roll into it. They're two very different things. And there's actually, if you look at other asset classes like equities, you get in that equities bucket, you get technology companies, and on the other end of it, you've got cement and mining companies, which are very, very, they're very, very different. And I think the digital currency, digital asset space is exactly the same. There's a huge heterogeneity in the space, but when you look at the prices, it doesn't feel like that. And I think partly because it's just not developed enough as an asset class. And I do define it as its own asset class. It's definitely not a commodity or a currency or an equity. It's definitely its own asset class. What really defines it as its own asset class is that it's programmable. It's I suppose a non-sovereign store of value. It's certainly in Bitcoin's case it is, and there's lots of other sort of features that mean it's its own asset class. But I think as the market develops, I think so will the sophistication and the understanding of all those other currencies or assets or projects become. And as a consequence, I think their prices should start to diverge or at least perform differently to each other. But I just feel for now, we've had it 12 years of Bitcoin. How long has Ethereum been around? It's 5-6 years or something. So it's still very much people's understanding. I actually only feel like people's understanding of Bitcoin's really only picked up in the last 3 years. It's very interesting. If you look at Bitcoin searches on Google, just do a global one, they spiked in 2017 from virtually nothing. So it really entered the public consciousness in 2017. And then those Google searches have dropped, but they're higher level than they are now. I think over the last 3 years, people have been doing their homework, really starting to understand it. And that's why we're seeing a lot of investors start to say yes to adding Bitcoin to their portfolios because they're starting to understand it. And I think the same will start to happen to all those other altcoins as people look more deeply into them. But I think there are 15,000 or something at the moment, maybe more.
Yeah, some crazy
and so I do get people pushing me, hey, what do you think of this project? And I look at the market cap and it's it's $300,000, and I think, wow. And then I look at the white paper and it's only one page. And and it does worry me that that's happening. So I think that's why it's got a bit of a bad rep in some respects, because like in any asset class or any industry, there are charlatans, and what you've got to do is just spend a lot of time doing your due diligence on these companies. And in many respects, it feels a bit like you're a VC investor when you're looking at some of these coins.
Yeah, definitely. That's really interesting. And I know that in the ICO boom of 2017, we saw a lot of that kind of thing going on, and then we're kind of back in that same place in some ways with the DeFi boom as well.
And I think the DeFi is interesting.
Yeah.
And I think this is, if you look at Ethereum, what Ethereum could be used for, DeFi certainly seems, I mean, with the smart contracts, it really makes sense. And I think that Ethereum really is a good solution for identity protection, i.e. some individual can own their identity properly online. I think there are some really compelling concepts for Ethereum. But, DeFi on its own, I think, just reflects people's attitudes towards lending just in the broader economy. People do have an high appetite for it. So it doesn't surprise me that it's being used on Ethereum.
Yeah, and I mean, of course, there's still some big questions about the future of Ethereum. Right now we're seeing these really high gas fees, slow transaction times, and there is this hope of, these both the second layer solutions as well as this migration towards ETH 2.0, which is spread out over the next couple of years. But you're absolutely right. There are some really exciting things, and it's going to be really, really interesting to see where that leads us.
I think there are still some unanswered questions with Ethereum,
well.
but I think just at least now we've got more clarity on ETH2 really helps. And I certainly think you've seen that increase in popularity amongst investors. And I think ETH2 is and absolutely the price as well. I think part of ETH is, I think it has outperformed Bitcoin times over the last couple of months. And I think it reflects that renewed confidence. But I still think there's some unanswered questions with Ethereum, and only time will tell.
Yeah, definitely. But one of the things we touched on this a minute ago, but I thought I'd ask you, sort of as we've seen rapid growth of the cryptocurrency market as a whole from the outside, what has that translated to in terms of the business that CoinShares is doing? I mean, have you gotten a huge number of inquiries or signups, or what has changed since we've seen since early November this huge rally that has brought Bitcoin so far up and the rest of the cryptocurrency world sort of along with it?
Yeah, so what we've seen is just broadly for the overall industry, rather than just CoinShares alone, is a massive increase in people buying Bitcoin funds of some sort. So just to put this in a historical context, in 2017, when we saw the hype there, we saw what they call net new assets of around $500 million at that point, at the peak in price. And then obviously as the price crashed, we did see a bit of an outflow. But then since then, we've seen, in terms of net new assets for the broader crypto industry, inflows of $8.8 billion. So a big increase in popularity, and actually no one really taking money out, which I think is really interesting, and it helps solidify Bitcoin's identity as a store of value, that people are buying it and holding it. As I know, I hate the phrase, but hodlers. That's what Bitcoin's called it. But I just see it as a store of value. But certainly we're seeing evidence for that. And if you look at assets under management, that's the net new assets plus the price effects. They've hit $35 billion. And it's been incredibly popular in the US. And I think the US are quite often the first to kind of really embrace new technology like this. It's been slower in Europe, but it's picking up quite rapidly now. Yeah, I mean, for CoinShares, particularly our experience over the last year, has been a big change in mindset amongst investors. 4 years ago, when I was at ETF Securities and we were talking about this, I'd have the old guy at the back of the room nodding his head saying, no way, this is absolute rubbish, and thinking I was some sort of imbecile.
Yeah.
I think when I started CoinShares 9 months ago, it's a very different experience. The team that was at ETF Securities has now moved to CoinShares, or some of them, and it's very fascinating speaking to clients now. Even over the last 9 months, things have really changed too. But people back 9 months ago, now they were saying, okay, this is something interesting. I think it might be a bit of a speculative asset, but let's look into it. And I think over the last 6 months, those investors have changed mindset again and said, actually, Bitcoin's here to stay. It's been around 12 years. I really need to understand this. Help me do that. And that's where I think the mentality's really changed. And we're only now, if you look at institutional adoption from an investor's perspective, it's only just begun now. You haven't, it's hard to, but if you can identify the number of institutional investors in it, there aren't that many. There's been some quite high profile names, such as MicroStrategy or Ruffer, for instance, or there's a few others I can't think of right now, but I've actually got a list of them all. But it's quite a small list. But we are now speaking to quite a large number of traditional asset managers that are close to pulling the trigger on investing into Bitcoin. So that's why I think this year, I'm sure we will experience volatility, no doubt, but I think we'll see it'll be the year of much greater institutional adoption.
Yeah, and Bitcoin seems to be sort of growing in the institutional world for a number of different reasons, but there's been a few specific instances of hedge fund managers, such as Paul Tudor Jones, talking about, the reason for this institutional interest in Bitcoin and sort of interest in Bitcoin more generally as being because of its, either already existing role or its potential as a guard against inflation. And we touched on this briefly earlier, but I kind of want to ask you a little bit more specifically about it. We've seen obviously a lot of quantitative easing, government spending this year, particularly in the United States in response to the COVID-19 pandemic. There's talk about, USD inflation and all of this kind of thing. Do you think that that's been a legitimate sort of boost for the case for Bitcoin?
This is, in the end, apart from the diversification merits of Bitcoin in the portfolio, is pretty much 100% the reason why investors are looking at Bitcoin now. Certainly based on, if you're a fly on the wall of most of our client meetings, I think you would draw the same conclusions.
Right.
Conceptually, it makes sense. People talk about hard assets. That's something of a fixed supply. Now, historically, that was the Swiss franc, Japanese yen, and gold, and probably not much else. Actually, now with the yen, the Japanese yen, you can't really argue it is because there's a lot of quantitative easing there. The Swiss franc, maybe, but people are looking to diversify in this with there's so much quantitative easing around the world. Investors are looking to diversify their hard asset buckets. So they don't want just gold, they like other things. And I think Bitcoin actually, when people understand it, it takes a while actually, quite a few meetings with our clients for them to understand that. Actually, conceptually, Bitcoin actually fits that bill quite well because it is something that is a distributed and immutable network. And the algorithm dictates a very predictable supply curve that you can't change. And I think that is incredibly appealing when your base currency that your portfolio is in, or in MicroStrategy's case, their treasury assets are in US dollars. They're concerned about the eroding purchasing power of the US dollar. And so one way to mitigate that risk is buying Bitcoin or gold, I think, to some extent as well. But many people are saying it is the hardest of all assets, and I have to say I kind of agree. Having been working for a fund that was very much gold, theoretically, I could somehow get $1 billion and produce lots of mining equipment that could go around and mine all the mine tailings around the world for gold mines. That's all the earth they've pulled out, and you could probably find quite a lot of gold. Now you could flood the market with that gold and influence the price quite significantly. You can't do that with Bitcoin because I could buy lots of Bitcoin mining hardware and start mining like crazy, but then we know the difficulty changes according to hash power. So whilst you would have a 2-week window where it might work, in the long term, it just wouldn't be financially viable. And I think that's what's really compelling about Bitcoin. Is the intention was to have a very predictable supply curve, and I think people are really starting to understand that now, and that's why maybe it's not fully what Satoshi Nakamoto's intention was, but that's why it's becoming a popular store of value.
So is the Queen going to be buying Bitcoin?
I think the hardest investors to convince are those that are incredibly conservative, and i.e. risk averse, and those that have a low risk appetite. I'd say certainly pension funds and a lot of insurance funds fit into that category. I think they'll be the last people that buy Bitcoin.
Okay. It might be a while.
Yes.
Okay. Got it. So another thing that we talked about a little bit before we started this interview was about sort of how we get people to stay in Bitcoin. And this maybe isn't so much of a concern for hedge fund managers and financial planners who are buying Bitcoin as something that they know is going to be a part of their portfolios for years to come. What I'm talking about now is these retail investors, which we've seen a lot of this year, huge growing retail base for Bitcoin and other cryptocurrencies as well, who might have been drawn to the crypto world, seeing all these headlines about Bitcoin going over 40,000 and having a bit of FOMO perhaps, and then sort of we're seeing some echoes or maybe some parallels with what happened in 2017, although it's definitely not exactly the same. First of all, why are those people important to the future of Bitcoin? These retail investors who might buy a few $100 or a few $1,000s worth of Bitcoin and just keep it in their Coinbase wallet, or Bitcoin or any other cryptocurrency. And if they are important, then how do we sort of get them to stay after the hype has blown away?
I mean, I think we don't do retail investors, what I describe, enough. We don't credit them for enough knowledge in the financial markets as I think we should do. I think many of them are actually very aware of what's going on with central banks and the printing of money, and therefore they're using it for that. But I also think there's equally a large group of retail investors that are just taking a punt and see it and think, well, actually, it's unlike an institutional fund manager who's got volatility and risk to consider. As an individual, you don't really care about that so much. You're happy letting Bitcoin fall from peak to trough by 83%, whereas that wouldn't be in the institutional world. So I certainly think people are perhaps using it as a speculative asset as well, and will sell out when they feel they've made enough money. I think that echoes in the longer term with Bitcoin. If you look, if you bought $100, when it hit 1,000, you would have made quite a lot of money. And would you sell at that point, or would you hold on? And that's why I don't think there are actually as many whales as many people think, because how many genuinely would have held on from $1 to $39,000, whatever it is today? Not very many is the real answer. But how do we keep them in there? I think, volatility will help. As that declines, as something becomes a store of value, volatility is a self-fulfilling prophecy that volatility tends to decline because people just buy it and just hold it and don't sell out. So it's a bit of a self-fulfilling thing. Gold is a good example of that. Gold in 1980 had an annualized volatility of 60%, which is a bit like where Bitcoin is now.
Okay.
And actually, as it then was establishing itself, the gold ban for US investors happened in 1975, and then it started to establish itself as a modern portfolio investment. And so its volatility has declined, and it's around 9% today. So, and I think that's because it established itself as a store of value. And I think that's what's happening to Bitcoin. That's why we expect the volatility to continue to decline. And I think therefore it will become more appealing. But interestingly, you know, high volatility doesn't make it a particularly good asset to transact in. Now, if you're buying and selling stuff in Bitcoin and nothing else, volatility doesn't matter at all. But if you're transferring it from Bitcoin to fiat currency of some sort, then suddenly it does. It's a bit like foreign exchange. So you can you care a lot more about volatility. So, you know, there were good examples of on the Steam gaming network, for instance. It was used as a currency, but it was so volatile in between the purchase of a product and the settlement to the vendor. The price had moved so much that they were either making a lot of money or losing quite a bit. So it wasn't viable, so it was abandoned. But I think as that volatility declines, so will its use improve too as a potential medium of exchange. And I'm quite encouraged by the Lightning network channel growth. So we've seen the number of nodes increase significantly over the last few years. And I think the total node count recently surpassed the 8,000 level. So for me, I think, you know, this is something that can operate on a different layer on Bitcoin that can help very much with the transaction speed too. I mean, part of the issue with Bitcoin is you can only do about 7 to 10 transactions a second, whereas something like Visa, you can do 3,000 a second. So, you know, Lightning helps address that sort of problem. And I think in those sorts of situations, long answer to your question, but I think we'll start to see more people coming into crypto in a more sustainable way.
Right. James, I want to thank you so much for your time. It's been such a delight to talk to you. But before we go, can you talk a little bit, does CoinShares have any announcements that you'd like to briefly talk about? Or, and additionally, can you tell listeners where they might be able to find more information about CoinShares?
Yep, so we are about to launch a new investment product on the 19th, so next week. And it will be a fully physically backed Bitcoin investment product with much lower fees. So and much lower relative to the competition. It will be listed on the Swiss exchanges and German Xetra exchanges too. So you know, for us, I think it's much more beneficial for clients because it's lower cost and the fact that it's physically backed. So theoretically, you know, if the world did go to hell in a handbasket, then you can get your Bitcoin back, if you know what I mean. So yeah, that's I suppose the important thing. We spent a lot of time over the last year thinking about valuations and how to value Bitcoin. I think it's particularly challenging to do so. So we've already had the first of 3 Bitcoin webinars, valuation webinars, and we're having another 2. One is on the I'll have to get back to you on the dates. I think one's on the 20th this month, and one's early February as well. But in those ones we talk a lot about existing valuation methodologies like stock to flow and what are the potential risks of applying those methodologies. And in the final installment of our valuation work, we talk about our approach using traditional financial metrics to value Bitcoin.
Absolutely. James, best of luck to you, and thank you so much.
It's been a pleasure.